You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glenn Sarvati.
Welcome to another edition of the Big Cast. My name is Glenn Sarvati on behalf of the Best Innovation Group, where we like to do cool things with financial technology. And today we've got an interview with Jessica Hewer and Carrie Stapp from Valera. They spearheaded a project recently that resulted in a report on the psychology of payments in terms of kind of the psychographic approach to how consumers/members think about making payments and the devices, the debit versus credit, other channels they use to actually make those payments. So we're going to dig into that a bit. So we'll get to that in just a few seconds after we go through our usual scan of the headlines. I'll remind you first, you can always find out more about the Best Innovation Group by checking out our website, big-fintech.com. And I also want to remind you that if you're listening to this right when the episode drops, you've still got time to join us for Fraudapalooza, which happens on Wednesday afternoon, October 23rd, 3 p.m. Eastern, noon Pacific, multiple stage. No, there's not multiple stages. There's one stage featuring our Grand Poobah, John Best, who wanted to really dig into what he sees as a pretty unprecedented situation right now with regard to payments fraud and overall identity breaches, things along those lines. He's gathered a bunch of information, but what we're really looking to do is crowdsource even more and have a great conversation with the community that always joins us and is always very participative on these calls. So hopefully you'll become one of them. Join us. No cost to join. You do need to register in advance, though. If you go to cutownhall.com, you can do that. And hopefully you'll join us for the lively conversation on Wednesday afternoon. And if you're hearing this after that or can't make that time, never fear. If you go back to that same cutownhall.com site after the fact, there should be a replay of that available to you. As I said, first, a quick scan of the headlines of what I've been looking at this week and just kind of, if it didn't hit your radar, making sure you're aware of it, and we'll post some show notes and links in the show notes so you can track down more information if you choose to. This is a couple weeks ago now. Fiserv received approval here from my home state of Georgia for their special purpose banking charter, which has been in the works for some time. And I think most people pretty much expected that it was going to be approved. It technically is a conditional approval, and it's not 100% clear what those conditions were, but I think it's pretty clear that it's going forward, and it's going to be interesting to see exactly how that plays out from a couple of different angles. The main takeaway from this, Fiserv's been pretty clear that they have no intention of becoming a traditional bank, but it does allow them to participate in the various financial networks without having to work through a bank sponsor, which has always been the case for these non-bank players. If this all works out, I have to assume that Fiserv will not be the last to do it. Technically, they were not the first, which I did not realize. I thought this was interesting. This charter has been available in the state of Georgia for some time, and the fact that it's Georgia doesn't really matter. It makes, you've got the entry point, and you can work from a national standpoint once you're approved. There was an Israeli firm, which is now a part of Shift4, as I understand it, that had received approval in the past, but it kind of became a moot point because Visa and MasterCard chose not to participate with them and approve their application to actually work their way directly into the Visa and MasterCard network. So that one really never came to anything. I think Fiserv being in the mix here makes this a lot more interesting, and I believe MasterCard's already indicated that they are considering and looking into it. So Payments Dive did some coverage on this. I'll post that link as well. But I think we're going to be hearing a lot more about this one. And it's interesting because coincidentally or not, Fiserv has been doing a lot of announcements lately with Walmart. And as we know, Walmart is one of the big proponents of trying to push back on interchange. And Pay by Bank seems to be one of the initiatives that they're looking at, as well as Walmart helping to cross-sell their Clover solution. So I think there's plenty more where that came from. And then the interchange argument, as we know, it's kind of coming at us from all sides these days. The Illinois interchange is still going on. And the Department of Justice is still waiting to see what happens. We're waiting to see what they say about the merger between Discover and Capital One. And on that front, the Credit Card Competition Act, which seemed to have been beaten back to some extent, has to some extent reared its head again. Credit to our friends at the Credit Union Times, who actually broke this story on Friday. And they mentioned that it appears there are some rumblings that the Credit Card Competition Act, which has been having a hard time getting a hearing on the Hill, is potentially they're looking at tucking it into disaster relief bills around the two recent hurricanes, which is kind of a pretty backhanded way of slipping it in there in what we would presumably call must-pass legislation. And two, it's textbook Durbin. Dick Durbin, again, one of the sponsors of this, and that's exactly how the Durbin Amendment got in the first place. It was the Defense Credit Union Council that actually raised their hand and kind of pointed out that this was going on. So it'll be interesting to see how that plays out. Congress does not get back into session until after the election. I'm sure the hurricane relief will be high on the agenda. It's just a matter, again, of another example why we all need to remain vigilant about the types of things that go on that may affect our operations. All the dirty sausage making kind of ugly stuff that happens in Congress that you still have to make sure that you keep track of, as unpleasant as it may be. A couple other events going on this week outside the U.S. that I think can easily miss our radar that's important to kind of keep track of. The Sibos Conference, which is the biggest, I believe it's even bigger than Money 2020. I could be wrong about that. And maybe this year it isn't, and I'll explain why in a second. It's much more of a global conference, and it tends to take place outside the U.S. with a rare exception. Taking place in Beijing this year, which, given travel restrictions and distance and everything else, I think is got to be pretty darn interesting. So I'll be watching to see what comes out of that. That's actually taking place right as we speak. I believe it started this morning or last night, depending on when you're listening to this, Asia time. So that'll be one interesting one. And then kind of counter programming. And it's interesting also that Sibos is actually in China. There is a BRICS summit. Again, BRICS, of course, being Brazil, Russia, India, and China. That's taking place in Russia this year. Not a payments conference per se, but there's some interesting coverage in The Economist that just came out that says that Vladimir Putin is using that as a venue to pitch what he sees as an alternative payment system to basically safeguard against folks like Russia being banned from the international payment systems that are in place today, and basically find a way to lessen the United States dominance in this area, pitching a solution called BRICS Bridge. I'll post the link to The Economist. This is brand new news. It's just kind of crossing my desk in the last hour or so before I'm recording this. So I'm sure there'll be more to hear, but at the same time, who the heck knows? At this point, it's probably platitudes. I doubt it's coincidental that it's showing up at the same time as Sibos. But it's a sideshow, I think, at the broader summit for that one, but it'll definitely enter the conversation pretty quickly. With that, as I said, this, when I see something that comes out, a report called The Psychology of Payments, that's like right up my alley. So I was very happy that Jessica Hewer and Carrie Stapp agreed to speak to me about this and dig in a little bit deeper to the recent report that came out from Valera. Let's have a listen. I'm here with Jessica Hewer, the Manager of Integrated Marketing, and Carrie Stapp, the VP of Marketing for Valera. They put out recently a report on the psychology of payments, which is exactly the kind of thing that catches my attention. So I wanted to follow up a little bit further on that. Thanks to both of you for joining us.
Thank you for having us.
So let me start by asking, I know you partnered with MasterCard on this initiative. What was the original kind of impetus for tackling this? And can you say a bit about the methodology?
Yeah, Glenn, I'll cover that one if you don't mind. Each year, we like to take a look at not just what's happening specifically in payment space, but what's happening with consumer behavior. Post-pandemic, we really saw acceleration of digital technologies. We've seen a evolution of the definition of the way that consumers look at financial services providers. And we have been able over the past couple of years to really get a look at, what types of products and services do they prefer to use? And it's sometimes can be a little bit different than what they're actually using. And so what we decided we wanted to do going into this research study as we partner with MasterCard was to say, let's not ask consumers directly which products and solutions that they're utilizing or what the world may look like in a perfect world. Let's really see if there is something behind the way that we manage our daily lives and how financial services fits into that? And is there a certain psychology behind how we look at the world, how we interact in the world, and how our financial decision making and financial behaviors are incorporated into that every single day?
So the phrase psychographics comes to mind, kind of that you're breaking up demographics more from a way that people think about the world. Is that a fair way of thinking about it?
Yeah, we you know how sometimes when you can really understand the why behind something, you can get to a better solution than if you ask someone specifically what they want, right? If you ask me, well, Carrie, would you, go to the gym at 10 o'clock at night, if or do you want the gym to be open at 10 o'clock at night or 24 hours a day? I'm going to say yes. That doesn't mean I'm actually going to go to the gym at 10 o'clock at night. And so really understanding my patterns and my behaviors to help bring about a solution that fits those needs. That was really what started to prompt us to say, we've not seen a lot of research embedded in the psychology of the way that financial services is looked at. And so we wanted to start diving in and understanding what's behind all of that and how it's changing post-pandemic.
Yeah, this is kind of off topic, but it kind of reminds me of some of the research that I've done recently about, consumers. Do you want to have a branch from your financial institution nearby?
Yes,
Yes. Do you ever plan to visit that branch? No.
right.
I just want to know it's there. Well,
I want to know it's there. I'm
that's
never
that's an
gonna go.
interesting conundrum how you actually balance those two.
Yes.
Let's get in. I mean, based on what you found from this, kind of to boil it down, you've kind of divided the world into two basic buckets of budgeters and non-budgeters. And that doesn't necessarily, obviously, it's not a perfect fit, but can you say a bit about what kind of falls into each of those categories and how they behave?
Yeah, I can jump in on that, Glenn. So we actually looked at 4 different motivational areas. We looked at mental accounting. So do members, consumers look at money as a single pool, or do they put it in various categories and budget? What is that pain of payment? Motivational area. Are they feeling negative when they spend money, or actually does it bring them joy? And they find that kind of a lovely experience. We also looked at a temporal focus. So are they concerned with the future or just present needs? And then a regulatory focus too. So are they looking at how they can maximize positive outcomes or avoid negative ones? And what we found is that actually between all 4 of those, really 2 core attitudes came out, that budgeter mindset and that non-budgeter mindset. And what we found for the budgeters is that they look at money as a way to really enhance their life. They look at it as a way to kind of plan ahead and save. They don't love spending money. It doesn't bring them a lot of joy, but they are confident in how they manage their finances. And typically their preferred card preference is actually credit. Whereas a non-budgeter mindset, these people really focus on how can I just get through the week? I've got this money. I need to spend it when I need it. It brings them a lot of joy when they spend it. But they're not as maybe confident in their ability to manage the finances or budget. And their card preference is actually typically debit. And so we kind of saw these 2 different mindsets, if you will, come to play. And it was fun as Carrie and I were going through this. I think if you hear those examples of what a budgeter is and a non-budgeter, I'm sure you can pinpoint which one you kind of fall into, Glenn. And it was fun to see, like, oh, where does my spouse fit in? Where does my sibling fit in? And so it's been kind of an interesting study.
Yeah, the thing that caught me off guard on it, and I think I clearly fall into the budgeter category. But when I think about it, I think you have to be careful about over interpreting what budgeter means, because I'm thinking of somebody who was like a fan of Mint.com and Quicken and really kind of PFMing your world and really kind of having a really tight control on it, which I think of as being the minority of the population. But the way that yours broke out, you've had more people in what you called the budgeter category than the non-budgeter, right?
Yeah, yeah. Go ahead, Jess, and then I'll chime in.
Okay, I was just going to say we found about 67% of respondents were budgeter mindsets.
That shocks me. Yeah.
Yeah. I would have assumed the same as you, Glenn.
I think that the interesting thing here that we found, Glenn, was first of all, income or wealth levels didn't really determine whether I have a budgeter or a non-budgeter mindset. It really is just psychologically sort of how I look at the world. And when I look at individuals around me that, that I may know on a personal or intimate level, the way that they look at their finances psychologically fits sort of the way that they live their life. I'll give you an example that I have one son who I would categorize as a budgeter. I have another son who I would categorize as a non-budgeter. The budgeter just in general is, much more cautious in his life, much more calculated in the decisions that he makes. My non-budgeter is much more adventurous and, there for the thrill and the in the moment expectation. And I think that feeds over into the way that we look at our financial lives. And, as Jess mentioned, we've certainly evaluated ourselves. I'm definitely in that budgeter category. I don't enjoy spending money. And it's not that I am, adverse to it. It's that I'm calculated in what I'm doing. So of course I love to go on vacation and do all the things that cost money. But I want to know that what I'm spending it on is worth it. Where on the opposite side, it's really more about, oh, I enjoy this, and so I'm going to go ahead and spend that money. And so when you think about that typical budgeter perspective, to your point about, really fully on mint.com or financial management, it's not always that sophisticated, because I think that it's really more about how do I live my life every day, regardless if I have the resources to, be able to afford the most things. It's not really embedded in any of those types of things or in my digital acuity. It's really just more about how I live my life.
Yeah, and it just suddenly occurred to me. I mean, this is one of those things where you always have to be careful not to treat yourself as a test market. I would venture to guess that people in our field, working in banking and payments and credit cards and things like that, are probably very heavily skewed toward budgeters, which means that we're developing products for non-budgeters. They may not be the majority of the population, but we've got to make sure that the products actually fit their needs as well, which I guess would be one of the outcomes of what you're hoping to bring out with this study.
Right. And that's exactly the point. And a lot of times as we've discussed this throughout the industry, I just came back last night from meeting with a group of our clients, and we were talking through some of this data. And a lot of times it's not even developing different products and solutions. As an example, let's talk about your card utilization, or you could talk about online banking systems, where we could utilize the same features and functions. But if I'm a non-budgeter, I may be utilizing my online banking, to make sure that I'm not overdrafting, to make sure that I'm not late on my payment, to make sure that my credit scores aren't affected. Whereas if I'm a budgeter, it may be, what rewards did I earn from my last month's spend? Or, am I able to apply my cash back? Or where am I on my 401k savings? And so the same types of tools and same products can be utilized, but positioning them and speaking to your audience in a way that motivates them becomes really important. And it goes really back to this hyper personalization that the consumer base is really getting used to. And the financial services industry, quite frankly, has been a little bit lacking there, right? We're going to take adding Dear Carrie on an email but I personalize that. And we're really talking about something much more sophisticated here. And really even saying it's even more so than the amount of money I have in my bank account, or more so than the life stage that I'm in. There's a whole lot of lifestyle that goes on that we need to do a better job of understanding in the industry.
Yep. And I want to come back to that rewards point too, because I think that's interesting. And just again, to remind people, the non-budgeters tended to align with debit usage. The budgeters tended to align with credit usage. And I'm going to venture to guess probably are more kind of rewards junkies. I think you said you did not actually measure who are revolvers versus transactors on the credit card side. I think that probably comes into play at some point as well. I think you said that might be an interesting kind of follow-up study at some point, right? But the other piece I was going to ask is, I mean, again, it's not a binary choice, because we know there are more debit transactions than credit transactions going on a day-to-day basis, but we only have a third. So there's a fair number of debit transactions that take place among the budgeters too. And for the ones who have credit cards, I think you actually broke things out by various types of activities. And there are several places where even the budgeters use debit more often. But then on the non-budgeter side, there's a relatively small number where the credit use is.
Yeah. Yep, you're right there, Glenn. So we certainly see a preference among budgeters for, credit and non-budgeters for debit, but there's still those consumers that fall into mindsets that might have an opposite card preference. And of course, looking at those specific occasions is also going to be kind of helpful to helpful insights too. So majority of non-budgeters still actually turn to credit cards for those larger ticket purchases, such as, travel, electronics, any unexpected bills over $250. And so we still saw that credit was, favored among budgeters and non-budgeters for those types of expenses. Whereas budgeters actually still prefer to utilize debit for ongoing, more mundane tasks of rent or mortgage payments, maybe those weekly groceries and utilities. And so there's definitely still, based on occasion, as well as this kind of behavioral preference.
Let's get back to the rewards thing too, because I think one of the takeaways from here that you're seeing is an opportunity for debit rewards to potentially maybe influence some of the decision making on the debit side. And I guess obviously top of wallet, and there's clearly some challenges around the debit side in a post-Durbin Amendment world. You don't have as much of a revenue pool to actually share via rewards. But what's your thinking in terms of debit rewards, if you can please say?
Yeah, it's an interesting topic, and one that again this week when we were with clients was top of mind. And I think that of course we've seen credit rewards really take hold. I think a lot of that is driven by some of those regulatory or financial reasons that you referenced. But I also think that the experience in the credit world is driven by the big banks that have created a really immersive rewards experience on their credit cards, which makes their credit cards so competitive. I think on the debit side, it has been lacking a little bit more. A lot of questions around, does it actually change consumer behavior if I were to stop my rewards? What would happen with the consumer? A lot more push for validation on that side of the house. Where I really think that the opportunity particularly lies on the debit side and rewards goes beyond where credit rewards are really more around the spend. I think on the debit side, it really needs to maybe lie more in that gamification of financial wellness. And so which creates a bit of a bigger problem, right? Because it's multifunctional. I need to look across different products and solutions to really be able to gauge, am I meeting, my retirement goals or my savings goals or whatever it is that I was trying to do on the debit side. So I think that's really where the opportunity in the future is going to lie in terms of debit rewards. But there is, I think, certainly a lot more to be done in terms of really researching and understanding what does a really solid debit rewards program look like long term.
Sounds we got a couple different potentials for next year's study.
Yeah, I know. Yeah, we're in that process right now.
The planning stages already. It's a full year round process. I'm aware of that.
Yes.
Yeah.
Yes.
One last thing, I just want to make sure we lay this out, because I kind of had a bit of a misimpression when I first looked at the report. I want to make sure that our listeners don't as well. You talk about debit and the non-budgeters who maybe haven't actually been acclimated or made aware of some of the benefits of credit cards in some cases. The idea here is not to get people further in debt. It's just to create an awareness of where certain instruments may apply better for one type of transaction than another.
Yeah, Glenn, that's right. It's really it's keeping that financial wellness in mind and also helping these members with their goals. So we saw amongst consumers with more of that non-budgeter mindset that there's a trepidation around using credit for those day-to-day purchases, which honestly, I think it shows a lot of self-awareness on their behalf. Yeah. They know that credit can be a slippery slope, so they're, a little worried about it. But the number one reason they give for avoiding credit is that they just don't want to accumulate any debt. But we also see through some of our other proprietary research that we've been doing is that more and more consumers are turning to credit as their preferred payment method. Now, some of that is a shift that can be attributed to the macroeconomic challenges that are happening right now. But we also see that younger generations are kind of leading that shift towards credit too. And a lot of that is because they're trying to build up credit as they're kind of coming of age and getting into the workforce and that sort of thing. And so understanding how to help these types of non-budgeters feel more comfortable with their credit cards is really what we were trying to accomplish with this. It's about giving them the tools that help them be fiscally responsible and helping them overall with their kind of financial goals. So promoting tools like maybe card controls and alerts, or providing some of that timely assistance or guidance, or even back to Carrie's point of, giving them rewards that are immediate that help them then kind of set financial milestones and goals for the future. So all of those kind of different ways that we can help those non-budgeters feel more comfortable while still being fiscally responsible with that credit card.
Yeah, it's a nuanced point, but I think a really important one. I think an interesting one that it's just, it becomes part of the marketing process to make sure you do it properly.
It is. Yeah, and I mean, access to liquidity, one of the biggest things that we see across the industry right now is consumers saying access to liquidity is super important. As Jess mentioned, I mean, a lot of that might be attributed to the inflationary cycle that we're in right now. And consumers, wanting, or I guess needing maybe access to funds. However, providing them tools and access to funds should not be encouraging moving into debt and living beyond their means. And so what tools need to go along with that to help keep that in check while giving them the things that they need for their daily lives? And to Jess's point, sort of demystifying that tool that credit is, and how do we remove the enticement to overspend. That should never be the intent of a credit card in the first place.
Yep. And that's why we have day jobs, right? That's
right.
It's not an easy task, but it's an important one.
It's not, right, exactly. And so, the more that we as an industry can help provide those tools, in addition to education, because financial literacy and financial wellness are actually two different things. We can educate all day long, but without the tools, especially in this disaggregated world where I'm like swiping and subscribing and tapping, and I maybe not know what I have out in outstandings everywhere, really helping them get a handle on what their financial life looks like and where they have opportunity for improvement, or opportunity to capitalize a little bit better on the tools around them.
I love that takeaway quote. Financial literacy and financial wellness are not the same thing. That's very true.
Right.
So if people want to find out more about this, I know that you're going to provide the link. We can put it in our show notes, but more broadly, it's Valera.com. Okay. Jessica Hewer and Carrie Stepp, thanks so much for taking the time. Great report on the psychology of payments. Really enjoyed talking to you.
Great. Thank you.
Yeah, thanks, Glenn.
So like I said, I was very interested in this report. There are many areas. I think of it more as a conversation starter. As we talked about, I think there are several other areas you can dig into here in terms of looking at transactors versus revolvers, whether people carry balances, the age of the different people that are in this survey, and then the whole notion, which I find really interesting, about budgeters versus non-budgeters, which is kind of the dimension that Valera chose to really highlight in this, and how that really varies from the way I at least traditionally think of budgeters. So I got to kind of clear my head of the semantics of when I think of, the PFM world on what budgeting tends to look like. But the one that really caught me was debit rewards. I think I've still got debit rewards, and I have to admit, I don't think about them much. I got to take a look and see how many air miles I actually generate from my debit reward card. And, the economics are challenging in terms of making that work. But if people are going to be incented and motivated by gamification, and if they're making a lot of their purchases on debit, I think they make a great point that it's a stone you should not leave unturned. Let's put it that way. With that, just want to mention, if you're heading to Money 2020, please drop me a note. Find me in the Money 2020 app. Next week's episode will still be live, but I'll be out at Money 2020 next week, starting on October 27th, Sunday the 22nd. The 27th, I should say. Always interested in gauging the credit union presence, and I know our friends at the Underground are doing a adjacent event out there at that time. But please, I'd love to know who's out there from the credit union world. It's obviously Finovate has seen a much greater presence in credit union world land these days. With 10,000 plus people at Money 2020, it's a little bit more like a needle in a haystack. But I usually parse the attendee list looking for credit union names, and if anybody wants to track us down, Again, you can always do it via our website, big-fintech.com. You can find me in the Money 2020 app or on X or LinkedIn. Glenn Sarvati, and I'm at 154 Advisors on X. And regardless of whether you're going or not, expect plenty of coverage, because what we always do out there is just see what strikes our fancy, track people down, and hope that they're willing to have a microphone put in front of their faces, and we'll share their thoughts and some of the insights with you over the course of the next couple of weeks. Again, you can always find more about the Best Innovation Group also on LinkedIn, and also Grand Poobah John Best at John Best. I think John Best Best Innovation Group. You'll get there. JB FinTech is his handle on X. At Big FinTech is the company's handle. Wherever you get your podcasts, we have new content every Tuesday. You can find us on Amazon, Spotify, Apple Music, etc. Like us, subscribe to us, stay in touch. Have a great day. We'll talk to you soon. Thanks for listening.
Check back each week for the latest from the Big Cast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big FinTech, email info@big-fintech.com, or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.